everyone. Joe Vitale, Vitale Wealth Management, with this week's Grading Investments Market Update. All information is gathered as of August 4th, 2025. Let's get into the week in review. Last week was packed with headlines: new tariff news, fresh job data, a GDP update, ongoing earnings reports, and an interest rate decision, which was nothing, resulting in the major U.S. indexes closing the week lower. The S&P 500 was down 2.34%. NASDAQ was down 2.16% and Dow fell 2.92%. Now, small cap stocks, as measured by the Russell 2000, led the declines with a loss of 4.16%. International markets look similar, with international developed stocks down 3.13% and emerging stocks falling 2.47%. Now, bonds were the silver lining, with the U.S. aggregate bond index rising 0.95% for the week. Now, in July is in the books. The S&P added 2.2% for the month and reached 10 new all-time highs. Technology was once again the best performing sector, adding a cumulative 28% over the last 3 months. So all this talk about the tariffs and all this talk about Liberation Day and how everything's going to go to pot, really not happening. In fact, why are we reaching all these new highs? Because it works. Everything is working and going the way it's supposed to. Upcoming economic releases: it will be a quiet week for economic data, with key reports offering insights into international trade and U.S. service companies. On Tuesday, today, the Trade Balance Report will provide insight into the state of international trade. Additionally, the ISM Non-Manufacturing Index will provide insights into the economic conditions and performance of the U.S.-based companies. Now, we already saw the market started green and started opening up ahead of time, positive, went back, and now it's positive again. So back and forth, depending on headlines and depending on who's talking. Market outlook: with more than 2/3 of the company's reported earnings season has surpassed expectations. As of Friday, the Q2 earnings are now projected to grow by 10.3%, more than double the 4.9% growth forecast at the start of the season. As we talked about, earnings, higher earnings make the market go, right? Everybody's like, oh, it's this. It's earnings is a huge part of it. Last week was packed with economic data. As anticipated, the Federal Reserve held interest rates steady for the fifth consecutive time amid ongoing concerns about tariff-related inflation. The first estimate of Q2 U.S. GDP showed solid growth of 3%, rebounding from a contraction in the prior quarter. Meanwhile, the labor market showed signs of cooling. The unemployment rate ticked up 4.2%. Job gains came in below expectations, and the prior 2 months saw significantly downward revisions. On the trade front, August 1st, the tariff deadline passed on Friday, with key U.S. trade partners, including Canada, India, Brazil, China, and Mexico, still active negotiations to secure new trade agreements. We have a lot of trade. A lot of that, we've been following up a lot of that. A lot of it has been very, very positive. So we'll see how these guys are holding out and what comes of that. Recent activity: the precious metals portfolio was rebalanced last week with the following changes. They sold palladium, increased palladium, and silver in the portfolio. Silver, if you're following, it's almost $40 an ounce right now, which just a year or two ago was $13, $14 an ounce for the longest time. So that's way up there. Gold, if you're following it, is about $34 and $3,400 an ounce, so that's way up as well. I saw about stocks in the news. Microsoft, which is owned in the Core Select G33 and G50 portfolio, reported an earnings beat last week, with its cloud business Azure being a major driver. It also joined NVIDIA in the $4 trillion club after it became the second company ever with a market cap reaching this milestone. Its shares were up 2.2% for the week. Apple, which is in the G33 and Core Select, also delivered an earnings beat, fueled by 13% year-over-year increase in iPhone sales, which is the strongest quarterly revenue growth since December of 2021. And its China business showed signs of recovery, growing 4% after several quarters of decline, but shares fell 5.4% for the week, because still everybody's like, Apple is not going anywhere. It's such a strong company, and of course all the iPhones that it has, but their AI technology, they're not as in as well as Microsoft and NVIDIA are. So we'll see where they go. I'm sure they're going to partner, and I'm sure they're going to be okay. That's it for this week's market summary. Thank you so much for being part of the Vitale Wealth family. If you'd like to get a hold of us, give us a call at 855-756-5700. Visit us at vitalewealth.com. God bless you. We'll see you again next week.